Hey guys, welcome to the daily analysis for today. It is December 11th and it's about 3:30 p.m. Eastern Standard Time here. And so today I'm going to be doing the daily analysis, of course, and covering some of the major pairs. Actually, in today's analysis, it's going to be a little bit different. I'm only going to be covering three major pairs. I'm going to cover the US dollar, Canadian dollar, which you see up in front of you. I'm going to cover the euro dollar, and I'm also going to cover the pound New Zealand dollar. Okay, so those are the three pairs I'm going to cover. I'm going to take a little more time, get a little more in depth, and even cover some multiple time frames on those, because I was just thinking today about some of the setups and some of the potential in these pairs, and I thought it would be more helpful overall to look at these pairs in depth than to do a brief overview of the entire market, just because there's not as many great setups like there are in these three pairs. Okay, so I hope that's okay with you. That's what the agenda is for today. And before we get into that, we'll just take a quick look at our news and also the terms, and then we'll get into it. Alright guys, so if you look at the calendar for tomorrow, using Forex Factory like we always do, you can see that the New York session, which again is the session that I'm typically trading, is pretty bland, pretty dull. There's a decent amount of orange tag stuff going on, orange tag things going on, but really no major red tagged events until 12:30 p.m., which is where FOMC comes into play. So FOMC is going to be a pretty big announcement, but until then, in terms of news, the market should be pretty quiet. And you can expect more of typical technical things to follow through, I suppose, because there won't be any knee-jerk reactions because of news. So maybe if you're a news trader, that's not positive, but for me, I kind of like that, because then if a setup occurs at 8 a.m. Eastern time, I know that in the next 4 hours there's no news announcement that are going to affect that trade really, which gives me a little more confidence in the technical setup. Okay, so 12:30 again is FOMC, and then at 2:15 there's the FOMC press conference. Those two things, go hand in hand typically, and do tend to have a pretty good effect on the market. So certainly do not ignore those if you still have trades sitting open around those times. Okay, if I scroll down, you can see that after that, just more yellow and orange tag news, and that's about it. Okay, so that is our news for tomorrow, and again, make sure if you're trading in the Eastern time afternoon that you're aware of those FOMC announcements. And now we'll quickly cover our terms, which basically just say that we're not licensed or qualified to provide investment advice, and the daily analysis is purely for your educational purpose, and that anything that I'm suggesting to you is just my own personal opinion, and it's not something that you should be taking as a reason to risk your own money. Alright, so if you need to pause it and read through those, please do so. Okay, so the first pair I have up here is the US dollar, Canadian dollar, as I mentioned. And right now I'm looking at the daily chart. And so a few things to note here. Number one, recently we've been in a pretty nice downtrend, pretty long-term downtrend actually. And up around 104 here, to be exact, is where we have the 50 fib level sitting, and this recent level of resistance that pushed price back down toward lower lows. And I think that these fib levels on the daily swings are very valid levels, and you can see another example of that, just how this moved down off the 50. But interestingly, what I'm actually anticipating here is a continuation of the up move rather than the down move, even though it is a great 50 continuation. And the reason for that is simply because I think this breakout here, if I draw kind of a trend line from these three tops, was a very strong, very legitimate breakout. And you can see that since then it has stalled to some extent, but we're still sitting on some major support in this area. All this area has a lot of support, and I think has a high probability of pushing price back up toward higher highs and actually continuing this upward trend rather than the downward trend. I know that's a little bit counter trend and not my typical style, but another thing that's going on here is if I draw from the recent swing high to swing low to swing high, the 50 fib level is going to come into play on this one very soon as well. So just based on the trend line and the USD, I'm still expecting the US dollar to gain some strength based on the United States stock market appearing to go lower. And typically when the stock market goes down, the dollar does gain strength rather than lose strength. And so based on a few of those principles compounded together, I think that the USD CAD actually has a lot of bullish potential here. Now we'll see if that stands true as soon as it moves toward that 50 fib level. Obviously there's a great probability that it could crash right through and it'd be very bearish, but just based on my opinion and some of the analysis that I've done on the USD CAD recently, I do like bullish potential here. And I'm not saying it's extremely long-term potential, but I think that at least a bounce here would be expected. And so that's what I'm paying attention to on the USD Canadian. Now, we're going to zoom into the 4-hour here and take a little bit closer look, and I'll show you some more. Alright, so this is the 4-hour view, and you can see that it's pretty overextended to the downside, moving quite a bit and pretty steeply since the bounce right off that 50 fib level, which was right here, or right up in here. And since then, it has moved pretty consistently down. Now, one thing you'll notice is that the bounce off this the first fib level, the 61.8 fib level, was pretty minimal, not a very strong bounce, and a pretty sharp continuation with this bar here, as you can see. But the 50 fib level tends to be a pretty strong level on these 4-hour, daily, weekly time frames, especially when there's a consistent swing trend moving. And I would say that this recent up move, especially considering the break of the downtrend to the upside, is a pretty nice consistent swing move. And so I'm expecting this 50 fib level to at least stall price and get a minimal bounce, if not a maximal bounce, back to the upside. And so a strategy here might be to look for a long entry right down here, right near the 98.45 level, and get profit locked in very quickly, and then potentially you'd be in at a great price if this rockets all the way back up toward the 105 or even higher level, because you'd be in with a pretty tight stop loss, and assuming that price continued all the way up toward 105, you could be in a 10 or 15 to 1 risk to reward ratio trade, which of course would be pretty massive profit on your account. So that's another reason that I like it, just the overall potential. To me, this is worth putting the risk on and having a probability of losing the trade. Obviously if you're going for a very extreme risk to reward ratio, the probability of winning the trade is going to be lower, but for me this is a perfect example of where I'm okay with a lower winning probability because of the potential reward. And so that's what I'm watching on the USD CAD, and I'm having a little bit of confidence in this 50 fib level just based on the daily swing that's in play right now. Okay, so that's USD CAD. Let's move over to the euro dollar now. So on the euro dollar, we kind of have an interesting couple of things going on. Number one, we have this wedge, which you can see here that I've drawn in, and it's kind of funny because you can just kind of ignore this bottom area where it broke out and then jumped right back in, because it almost had no effect. It didn't begin a new trend, or it didn't come back and test and then go lower, and it didn't break back through and go to the upside. It wasn't a fake out for a new breakout. It just kind of went below, broke right back in, and now we're ranging again. So it's a little bit confusing, and to be honest, the euro dollar has really tricked me. When I thought it was going down, it moved up, and when I thought it was going to really continue moving up, it started moving down, and so it's given me a lot of trouble, honestly, trying to forecast the euro dollar. And so I think perhaps the reason for my confusion with the euro dollar, well, there's probably a few things. Number one, it's been just confusing. So anyone looking at it might be a little bit confused on what's going on. But I think one of the main things is that I just haven't scaled back and removed some of my forecasting and just looked at the major levels, because even though the euro dollar has been bouncing back and breaking through and faking out and doing a lot of weird things, it has still continued to honor most of our major levels. Like for instance, if I draw a level up here around the 132, this whole zone has been a major area of resistance, and each time it's got up in here, it's fell. Now the same thing is true down here, and this has been a major level of support, which it's honored each time that it has come down here, except for one, when it broke through. And as soon as it broke through, it came to our next major level, which is about right here, and then bounced right off that level. Let me draw that a little better. Line it up there. But it bounced right off that level. So for some reason, maybe my view of the euro dollar has been a little off, and I've been, not looking at these levels correctly. But it actually seems that, the euro dollar is making a lot of sense when you look at it like this, because it's bounced back and forth between major levels, and when it finally broke through one level, it carried right down to the next major level, where you'd certainly expect price to go, and then bounce from there. So really a pretty logical sequence of movements on the euro dollar. I guess just the overall range is what has really got me overanalyzing, because I want there to be this great breakout and this wonderful move on the euro dollar that trends for 3,000 pips, and so that's what I keep trying to forecast. Okay, how's it going to break out and move 3,000 pips when it's simply not doing that? And I kind of realized, I did some self-evaluation, and I kind of realized that that is one of the problems with my technical analysis on the euro dollar specifically, is that rather than just taking a step back and looking at exactly what's going on, I viewed it in kind of correspondence with what I wanted to happen, which is this great big move, and not really notice what it's actually doing, drawing out these levels and just saying, okay, hey, well, we're moving towards another level. We're in a pretty ranging market since about the middle of August, so it's pretty likely that we're going to continue to range and not get a lot of great bursting movements. And if I had done that, I probably could have made a lot of great trades, shorting up here, shorting here, shorting here, buying here, buying here. Really wasn't a buy signal even here very much, so I probably wouldn't even have lost this trade when it finally broke the level, but I would have been able to buy here. So actually, a correct perspective of this market would have provided a lot of great entries, but instead, it's been kind of kicking my butt because I haven't been approaching it the right way. So, kind of learning about that and noticing that about myself, I want to draw your attention to it as well, and just warn you about doing that, because it really can hurt your analysis and hurt your perspective, and overall hurt how much money you make. And that's of course what we're trying to eliminate, is mistakes that cost us money. So I think that's very important to notice. And now, based on that kind of this new perspective, I don't know why I was not realizing this before, but my expectation for the euro dollar, until it shows me something different, is for it to range back and forth within here until we get a strong break, maybe a test and continuation, and then after all that happens, after there's obvious and purposeful movement in the market, then we can look for those long-term trend lines. Now, of course, as soon as I say this, it's probably going to break out and start moving 3,000 pips now that I finally came to this amazing realization. But that's not what I'm expecting, because now I have an appropriate view of how the market is moving, and within that, I think there's going to be some good trade setups. Okay, so I apologize for my rant, and I apologize if you've been trading the euro dollar wonderfully. Well, I have not, but I thought it appropriate to call your attention to something that I think is going to be a big effect on my trading, and something that, if you've been the same way, if you've been following my analysis and kind of trying to read into what I've been saying, you might have been in the same boat where you're waiting for this major move and thinking, what is Nathan talking about? There's nothing happening here. Well, that's why, because I was trying to forecast the move that wasn't even there yet. And so I apologize for that kind of over analysis, which I know I've kind of hinted about. I probably have never said in the analysis that it's going to happen, but that's kind of what I've been hoping for and laying out the criteria for, when in fact it's simply just not that's not happening right now. Okay, so that's the euro dollar, and lastly, we're going to move into the pound New Zealand. Okay, so the pound New Zealand is the last pair I want to look at, and I want to start by checking out the weekly chart, and just again point out the trend line we have in here, the upward trend line that's been tested several times. Pretty good intact trend line, pushing price, a couple hundred, even up to 1,000 pips each bounce. And here you can see that we're approaching this trend line right now in this current week, and so I'm expecting, it could certainly stick through a few hundred pips, considering how much the pound New Zealand moves, like this one does here. But depending on how this week closes, we could be up for a great bullish run on the pound New Zealand. Okay, so let me switch over to the daily chart and give you a little better perspective on that. Okay, so you can see the daily chart. Obviously, we've talked about kind of the triangle here on the pound New Zealand that has been intact for a while, and we finally did get that bearish breakout to the downside, and broke out, already moved quite a bit really, and now we're heading right for this major level, which is this weekly trend line that I just pointed out. So obviously, assuming this trend line holds intact, we'll be looking for bullish moves off this trend line. Now, One thing to note is that this will be some major resistance, the bottom of this triangle that we've just been working on, which if you're worried about that, it's going to hurt your target potential a little bit. So one way to attack this might be to take a long with a good signal off this trend line and make sure that you lock in profit once it gets up to this area in case it bounces right back down. But overall, I think targeting right back up toward the 2 area is the most reasonable target, because that's where a lot of these swings have gone, and actually some of them have gone a lot higher, up to 208 even. But just this recent swing has ran right up to the 2 area before moving back down. So to me, that's a much better target, obviously, than taking just toward the 194 area. Okay, so with the pound New Zealand, again, it's very likely that we'll get a point through and then a continuation after that test or that pierce, and be looking for bullish potential from there. Again, there are some major levels. This level here is going to be a pretty big level that's going to have to fight with. But again, I'm not sure that should really limit your target just based on that, because a lot of these bounces have gone up much higher. And on the pound New Zealand, you never know when a great run is going to take off, so you don't want to limit your profit like that. I would advise maybe locking in some profit as soon as it got up to this area, but I would not get out of the trade with just that amount of profit when I know how much profit potential there is. Okay, so that's the pound New Zealand. The weekly trend line is there. I would probably be waiting for a daily setup and then maybe even a 4-hour confirmation. Once you get all your confirmations lined up and you take the trade, it becomes about managing it. And again, with the pound New Zealand, I think you want to make sure that you get as much profit potential you can out of the pair, because you never know how much they can run. Okay, so that's my analysis for today, guys. I hope it was beneficial to you. And I apologize for not covering too many pairs, but I hope that just these few pairs and going into a little more depth was a valuable resource for you. As always, please leave a comment with any thoughts or questions or anything like that, and I'll talk to you soon.